Okay, hello everyone, guys. Good evening. How are you all? Good evening, everyone. Good evening, guys. Audio, video, everything is clear, working fine with everyone. Yes or no? Hi, guys. Good evening. Hello, Krishna. Hello, Lakshmi. Hello, Gopal. Hello, everyone. Hello, Hema. Hello, how are you all? Audio, video, everything is clear, working fine. Yes or no, guys? Audio clear, video clear. Okay, good evening, Ruchi. Good evening, Hema. Good evening, Gopal. Good evening. Good evening, everyone. So today we are going to start module D, right? So module A, B, C, D. Okay, last is D and we will be finished. So I have given you a lot of MCQs. Okay, a lot of MCQs because Macmillan whole we have completed. First of all, whole Macmillan A, B, C, D, then I have started this sure short series or sure short. Okay, that is means one module in one lecture, right? So I have given these four also. Plus, we have the crackers batch. We have the various sessions going on. So I have given you a lot of free content as well, a lot of MCQs to practice. Now it is up to you guys that you have to practice genuinely from each and every practice session. Okay. Hi, Swati. Hello, Mohan. Hello, everyone. Right. So let's start discussing this IEIFS Module D, everyone. Okay. So let's discuss the very first question is what? We have to choose the correct statement here. First, non-recourse factoring. In this type of factoring, the factor does not take the risk on the default. If the debtor fails to repay the invoice, the liability fall on the business firm itself. That is known as non-recourse. Recourse, the liability of the bad debt remains with the factor and they cannot reclaim the money from the business in which the debtor defaults. So now you have to choose the correct statement regarding the course factoring and non-recourse factoring. Recourse factoring and non-recourse factoring. Everyone, please answer this question. Very easy. You can all answer this question. Everyone. Everyone, guys, please answer this question. Recourse and non-recourse factoring. Everyone, please answer this question. Recourse factoring and non-recourse factoring. Everyone. So what is the recourse factoring? This word, recourse and non-recourse. I have explained a lot of time this word. Recourse and not recourse or non-recourse. What is recourse and what is non-recourse? That you have to explain, everyone. So I'm not going to answer. I'm not going to answer. You all have to answer. Just listen out carefully what is written. Non-recourse in this type of factoring, the factor does not take the risk of the default. Okay. If the debtor fails to repay the invoice, the liability fall on the firm, business firm itself. Recourse factoring, the liability of the bad debt remain with the factor and they cannot reclaim the money from the business in the case of debtor default. Everyone, please answer this question. You have to choose the correct statement. So Gopal is saying C, Lakshmi is saying B, and everyone else, just please answer this question. Everyone else, please answer this question. See, when we are talking about recourse term, okay, and when we are talking about the non-recourse term, okay, now you are all confused with the very first question. This is not expected from all of you, right? And none of you have answered, okay? Recourse factoring is what? Recourse factoring means, for example, there is a seller, there is, you can say, a buyer, right? And this is the factor. Now just listen it carefully. Now, seller sell goods to buyer, buyer promise to pay. Now seller has bill of exchange, sellers want immediate payment, goes to a factor, present the bill and factor presents the payment, immediate payment, and factors the bill, right? Later the factor send this bill of exchange to the buyer and the buyer pays, or buyer pays to the factor. Now what is recourse and what is non-recourse? Now, in this condition, see, when the factor present the bill of exchange to the buyer, and if here in this step, buyer defaults on payment, if in this step, buyer defaults on payment, okay, Now, if the buyer defaults on payment, the factor go back to the seller and demand for the compensation here, because factor says that I have given you the immediate payment with this bill of exchange, but now this bill of exchange is actually defaulted. Now you are responsible for giving back my money. So when the factors can demand compensation back from the seller or the business, then it is known as with recourse. It is known as with recourse. And without recourse means if the default happens, if buyer defaults, right? And factor has to absorb all the losses. Factor has to absorb all the losses by themselves. Okay, they cannot demand compensation from the seller. Then it is known as what? Then this is known as the non-recourse factoring. So in non-recourse factoring, factor have to absorb all the loss. Okay, and they cannot reclaim the money from the seller or from the firm. Whereas in recourse, factor don't have to absorb the loss, they can demand repayment from the seller. Now, both the statements are wrong because the statements are interchanged. This first statement is actually recourse factoring, and the second statement is non recourse factoring. So, if we choose the correct statement here, neither one nor two is the correct answer. Everyone, neither one nor two is the correct answer. Clear? Any doubt in this? Everyone, at least just please like the video, guys. At least just please like the video to the maximum you can. Everyone, just at least like the video, guys. No doubt, everything is clear. Whoever is watching this session, kindly just please at least like the video. Okay, give me a thumbs up also when you are done, when you have understood the complete thing. So just please at least give me a thumbs up. Okay, Lakshmi, done. Good, nice. Now next question. See, forfeiture gives an undertaking to execute a specific forfeiting transaction at a firm discount rate within a specified time. Now, what is the fee for such undertaking is known as undertaking fees, commitment fees, blocked fees, and finance fees. Read out the question. Very easy question. You can all answer this question. So, you have to tell me forfeitor gives an undertaking that, okay, I will execute the forfeiting transaction. You just proceed on with the buying and selling thing. Now you have to check that which of the following fee, when the forfeitor gives that undertaking that yes, I am responsible for giving the forfeitor amount, then what type of fee involved in this process? What is the fee that is involved in this process? So Naveen is saying B, Rigved is saying B, and everyone else, please answer this question. I want answer from each and every one of you. So the correct answer for this question is what? Yes, the fee is called as the commitment fees. This fees is called as commitment fees. Now understand that factoring and forfeiting. Factoring and forfeiting. These are the two very important concept of module D. The difference is very important. What is factoring? What is forfeiting? What is the difference between factoring and forfeiting? Very important for you all. So kindly just please take the book and just or take not even the book, from the PDF itself, just revise what is the difference between factoring and forfeiting, because the question can be asked in the examination. Okay, done. Okay, next question. Which committee recommended the creation of venture capital in India? It is a PYQ. This question is a PYQ. So, which committee recommended the creation of venture capital in India? Bhatt Committee, Malhotra Committee, SN Committee, and Narsimha Committee. Which committee recommended the creation of venture capital in India? Everyone, please answer this question. Venture capital in India. Which committee recommended the creation of venture capital in India? Guys, I want to answer from each and every one. Now, this is what This is a PYQ. Everyone, please answer this question. Everyone, please answer this question. Very simple. This is a PYQ plus the question is asked in the examination. Everyone. And meanwhile, just tell me what is a venture capital. You also tell me what is a venture capital. So everyone, the volume is low. From everyone's side, the volume is low, or everyone is getting my voice clearly. Everyone is experiencing low volume, or the voice is clear for everyone. Yes, it was a Bhatt committee, right? So you are all confused with A and B, but A is the correct answer. Bhatt committee. See, committees are very important. I am again telling you, committees are very, very important for all of you. Okay, so don't miss out any committee. Okay, venture capital. Now, if we talk about what is a venture capital, so venture capital is the institution that provide funding to the startup at a very early stage. Venture capital funds are the investments which are done by the venture capitalists in any startup at a very beginning or a early stage, that is called as venture capitalists. And which committee has recommended the creation of venture capital? It was the Bhatt committee, which has been established in year 1972. Bhatt committee, which has been established in 1972. Volume is low. Volume issue is there. Actually, I'm just speaking a little bit low, but let me check once, because everything is clear here. The decibel is high and everything is good. Okay, next question. Which of the following characteristic regarding the venture capital funding is incorrect? So you have to choose the incorrect characteristic of the venture capital funding. They are the high risk investment made with an intention of making high profit. The investments made are based on the short term goals. The provider of the venture capital can participate in the management of the company. Money is invested generally by buying equity shares in the startup companies. Now, which of the following characteristic of the venture capital funding is incorrect? Everyone, which of the following is incorrect? Everyone, please answer this question, and just please like and share the video to the maximum you can. Everyone who is watching this session, just please like and share the video to the maximum you can. So the correct answer for this question is, at least whoever is watching this video, you have to like the session. Okay, so Naveen, Gopal, Krishna, Vivek, Mohan, you are all saying B. Only Naveen is saying C. Okay, so now when we are talking about the venture capitalist funding, we have to choose the incorrect statement. Just first of all, focus on this point. We have to choose the incorrect statement. They are the high risk investment made with an intention of making high profits. Right, correct statement. These investments are made on short term goals. No, it is actually made on a long term goal. So B is the correct answer, because B is the incorrect statement. Okay, so B is the correct answer. Right, next question. Where is India's first international financial service center located? India's first international financial service center located. Where? Everyone. This is also a PYQ, but it was asked in May June examination cycle of 2024. Right. So, where is India's first international financial service center, IFSC, located? India's first IFSC located. Now you are all saying A. Everyone, please answer this question. I want answer from each and everyone. Okay, so now you are all saying Mumbai. Mumbai. Every one of you is wrong. Well, Krishna, Kavita, Lakshmi, Vivek, Mohan, Gopal, Naveen, everyone. Only Hema is correct here. It is Gandhinagar, Gujarat, right? So, India's first international financial service center is actually located in Gandhinagar, Gujarat, right? So, this was a PYQ. Okay, done. C is the correct answer, everyone. Next question. Which type of non-banking financial companies function as an hosting agency for the development work? Which type of NBFC actually acting as a hosting agency for the development work? Asset finance company, infrastructure finance company, microfinance institution, or investment company? So the correct answer for this question is what? Everyone, please answer this question, and please, everyone, just like the video, guys. Which type of NBFC actually work as an hosting agency for the development work? So the correct answer for this question is what? Okay, Krishna is saying a asset finance company. Development work. Focus on this point, right? Asset finance company, the function is clear from the word itself. It is for asset financing, right? So when we are talking about the development work, it is the infrastructure who attracts the development, who actually attracts the visible development in the country. So obviously B is the correct answer. Infrastructure finance company is the correct answer. Okay, done. Good. Now, next question. Which of the following entities are not mandated to distribute a minimum of 90% of their cash flow to investor for the loan repayment? REITs, InvITs, NBFCs, both REITs and InvITs. So, the correct answer for this question is what? Everyone, please answer this question, guys. Every one of you, please answer this question. Which of the following entities are not mandated to distribute a minimum of 90% of their cash flows to investors for loan repayment? It is REITs, it is InvIT, it is NBFCs, it is both REITs and InvITs. So the correct answer for this question is what? Yes, obviously. See, for both REITs, okay, real estate investment trusts, and InvITs, infrastructure investments trust, in this they have the mandation that they have to distribute at least 90% of their cash flow as a dividend or as an income for the investors. Okay, so this is not the option and this is not the mandatory thing in NBFCs, but in InvITs and REITs, yes, this is mandated. So C is the correct answer, right? Good. Next question. In which of the following investments in real estate the least liquid? Least liquid. The question is asked in which of the following investment in real estate is considered to be as least liquid? REIT, physical real estate, equity in real estate company, bond issued by real estate company. So the correct answer for this question is, everyone, in which of the following is an investment in the real estate that considered to be as the least liquid? Okay, Kavita is saying A. Okay, reads, and everyone else. Okay, Gopal is saying B, physical real estate. Okay, Vivek is saying read, and everyone else. Seems to be easy questions, but yet it is confusing, right? Yet it is confusing. So, in which of the following is an investment in the real estate that is least liquid? Everyone. So, the correct answer is what? Yes. So, now you are all confused. But this is a very easy question. Least liquid. When we are talking about REITs, when we are talking about equities in the real estate company, or when we are talking about the bonds, they are highly liquid. Highly liquid means they can be sold easily in the market. They can be easily converted into cash, or they can be immediately converted into cash, but not the physical real estate. When you try to sell buildings, just compare like this. When you try to sell a building, or when you try to sell a bond related to a real estate company, now which can be sold easily in the market? Obviously bond. Which can be sold or which can be just quickly convertible into cash? Obviously bond. Because in this building you have to follow a lot of norms and procedures. You have to search for the buyer. This also will be sold in the market, but it is less liquid than bond. So least liquid is the physical real estate. So only one, Gopal, is correct here. Only one, Gopal, is correct here. Okay, done. Clear. Good. Next question. What is the minimum amount of investment that can be made in a REIT? Minimum amount of investment that can be made in a REIT. See, I have framed a lot of question of REITs and InvITs here. The thing is because I have just given very easy type question in this class because we are discussing already a very mind consuming questions in the paid classes, right? So you have to practice both. See, only focusing on the case study type questions or statement based question is not the solution, right? So the examiner is giving you mixture of difficult and easy questions, right? So because we are already discussing a lot of difficult and mind consuming topics and case studies in the crackers batch itself, so now I want you all to just prepare for these type of questions also, which are just straight away, which are easy, which are very scoring, which you have to learn every day, right? So what is the minimum amount of investment made in a REIT? Everyone please answer this question. Minimum amount of investment made in a REIT is 15,000. Okay, so the correct answer is 15,000. 15,000, right? Minimum amount of investment you can made in a REIT is 15,000. C is the correct answer, right? Now, next question. Which of the following is not a segment of the financial market? Agriculture, commodity market, credit market, money market, insurance market. Which of the following is not a segment of the financial market? Everyone. Everyone, just please like the video, guys. Whoever is watching this video, at least just please like the video. Everyone. Which of the following is not a segment of the financial market? Please answer this question. Not a segment of the financial market. So money, credit, insurance market, yes, these are the segment. A is not the segment, agriculture, commodity market. Now we have to choose the correct statement regarding the derivatives. We have to choose the correct statement regarding derivative. The term derivative refers to a typical type of contract whose values is dependent on the underlying asset, group of asset or benchmark. In India, different derivative instruments are permitted and regulated by SEBI, Securities and Exchange Board of India. So you have to choose the correct statement regarding the derivative. So the correct answer is what? Correct answer is what? Everyone please answer this question. Okay, so Lakshmi is saying A, Vivek is saying A, okay, Kirti is saying C. Mohan is also saying C. Chandan is also saying C. So both the statements are correct and only one is correct. So first is clearly correct. Okay, there is nothing wrong in the first statement. All of you is not confused in the first statement, but second statement you are all confused. See, in India, derivative instruments are permitted and regulated by SEBI only. This only, because of this word only, this statement is wrong. Because in India we have the self regulatory organization also, plus CB is also responsible for regulating derivatives. RBI is also responsible for regulating derivatives. Okay, there is a self regulatory organization, okay, for the derivative sectors, okay, which is also managing the derivative instrument in the market. So yes, second is the wrong statement and first only is the correct statement. So A is the correct answer here, right? So no, not both is the right statement. A is the right statement here, everyone. Okay, cool. Can we move to the next question? Can we move to the next question, everyone? Okay, next question. State development loans are instrument in which of the following market? State development loans are the instrument in which of the following market? Money market, credit market, debt market, or derivative market? State development loans. Now you have to answer this question. State development loans are a part of which market? State development loans, guys, everyone. State development loans. State development loan. Yes, state development loans are the part of the debt market. Okay, so debt market consists of the STL also, bonds also, right? So C is the correct answer. Now Which of the following is not considered as a long term receiving bill under the regulatory debt entities regulation? So this is again a PYQ, everyone. This is again a PYQ, but was asked in my June examination cycle of 2024, right? So which of the following is not considered as a long-term receiving bill under the regulatory debt entities regulation? Infrastructure bond, treasury bill, corporate bonds, municipal bonds. So the correct answer is what? Very simple question. Just please focus on the question. You can all answer this question. Very simple, very easy question. Which of the following is not considered as a long-term receivings? Long-term receivings. So when we are talking about, see, municipal bond, corporate bonds, and infrastructure bonds, these are the long-term receivables, right? But treasury bills are okay. No issue, guys. So you will face today the network issue. Every month the Wi-Fi is running very slow. You will all face some network issue because today in Srinagar the weather is not good. Okay, from 1 2 days the weather is behaving very differently here, and so there is network issue, Wi-Fi issue right now. Okay, so you will face. Just please bear with me, right, everyone? Okay, done. Next question. Treasury bills in India generally do not come under which of the following maturity periods? 91, 182, 273, and 364 days. Very simple question. Treasury bill in India generally do not come under which of the following maturity periods? These are the easy type question, yet these are very important question, very scoring, straightforward questions. Treasury bills does not come under which of the following maturity period? Obviously, 273 is the correct answer. So, treasury bills, these are short term financial instrument deal in the money market. They have the maturity period of 91, 182, and 364 days. So, the correct answer for this question is C. Right now, what is the minimum net worth required for a corporate to issue a certificate of deposit? What is the minimum net worth required for a corporate to issue a certificate of deposit? So the correct answer is, okay, so the correct answer is, what is the minimum net worth required for a corporate to issue a certificate of deposit? So the correct answer is what? No, no, no guess, Kirti, don't guess. Okay, so there is no minimum requirement for a corporate to issue a certificate of deposit. So D is the correct answer. This is like a very simple question, yet confusing, right? So D is the correct answer. Good. Next question. What is the maximum tenure for long-term repos operation? LTRO. Now, everyone just please tell me what is LTRO first. Then you will tell me what is the maximum tenure for the long-term repos operation. Everyone, please answer this question. First of all, just tell me what is LTRO. What is LTRO? First of all, you just tell me. Okay. So the correct answer is what? So what is a long-term repo operation? What is a long-term repo operation? First of all, just tell me what is a long-term repo operation. So when we are talking about the long-term repo operation means when there is Reserve Bank of India who just give loans to the commercial bank for a period of 1 to 3 year, then it is considered as the long-term repos. So the maximum tenure for LTRO is B, that is 3 years. So B is the correct answer. All of you is correct. Some of you is confused with the 10-year also, but right, everyone is correct here. Maximum. So 3 years is the maximum tenure for LTRO. Right, everyone? Okay, now next question. What is the minimum amount of stake that a sponsor should hold in an infrastructure investment trust? What is the minimum amount of stake that a sponsor should hold in an InvIT? So the correct answer is what? Everyone. Minimum amount of stake that a sponsor should hold in a InvIT. Everyone. A sponsor should hold in a InvIT. Yes, so the correct answer is yes, everyone is correct here. Yes, C is the correct answer, 15%. Good. Next question. Sponsor should not hold less than dash percent of the total unit of the investment trust after initial offers done in the REITs. Okay, so this is all one-liner questions, everyone. The sponsor to not hold less than dash of the total unit of the investment trust after initial offer in the REITs 25, 30, 35 or 40%. Everyone. Chandan, Lakshmi, Nilesh, Vivek. Where is Hema? Why Hema is not answering? Why Ruchi is not answering? Everyone, you have to answer this question, guys. Everyone, just please answer this question, guys. Sponsor to not hold less than dash of the total unit of the investment trust after the initial offer in the REITs. So the correct answer is no. This is simple, very easy question, yet you are all confused here. All of you are wrong. 25% is the correct answer here. 25%. Sponsor do not hold less than 25% of the total units of the investments in the REITs, right? Next question. The process by which a stock exchange transitions from a mutually owned entity to a shareholder owned company is known as stock exchange transition from a mutually owned entity to a shareholder owned company is known as dematerialization, demutualization, demonetization, or monetization. Everyone, Irfan, this is the structure of InvITs. This is the structure of REITs and InvITs. I have detailed explained in the class. If you see the last two units of IEIFS foundation batch, you will see that what are the management thing. So sponsor, we have the three-tier management, right? So every tier has its own criteria of holding shares in the REITs and InvITs. Okay, so this is like the management sponsorship, right? So A is the correct answer for this. Now, this is obviously demutualization. Every one of you is correct. Next question. What are the following capitals which are issued in the primary market? What are the capital issued in the primary market? IPO, FPO, equity, bonus share. What are the capital which are issued in the primary market? Everyone, please answer this question. Everyone, please answer this question, guys. What are the capital which are issued in the primary market, guys? Okay, Ruchi. Okay. So everyone, at least just please like the video. Whoever is watching this session, guys. Whoever is watching this session, guys, at least like the video, everyone. Okay. So now, yes, first of all, what are the capital which are issued in the primary market? First of all, it is IPO, initial public offer. Then FPO, follow on public offerings, right? Then equities and bonus shares, these are the part of the secondary market. These are the part of what? These are the part of the secondary market. So obviously 1 and 2 is the correct answer. C is the correct answer. Done. Next question. Choose the correct statement. Equity shareholder do not have any voting right while preference shareholder have. Equity shareholder had the right to participate in the management decision while preference shareholder don't have this right. We have to choose the correct statement here. Here, everyone just choose the correct statement, guys. Choose the correct statement. Everyone, please answer this question and choose the correct statement. Very simple. Just focus and answer this question. Very simple questions. Equity shareholder do not have any voting right while preference shareholder have the voting right. Equity shareholder have the right to participate in the management decision while the preference shareholder don't have this right. Correct statement. Right, B is the correct statement. See, equity shareholder don't have the voting right. That is false. Equity shareholder have the voting right while preference shareholder don't have the voting right. Right. Second, equity shareholder have the right to participate in the management decision. True, while preference shareholder don't have this right. So yes, if we talk about the correct statement, B is the correct answer. Second only. Next, what is the important parameter for any bond? What is the important parameter for any bond? Face value, maturity, coupon, interest rate, or all of the above? What is the important parameter for any bond? Everyone, important parameter for any bond. Okay. So Kirti, Nilesh, Gopal, you are all saying D, Lakshmi, yes, D, everyone. First of all, what is the face value? Face value is actually the price which we are giving for purchasing that bond. That is called as the face value, right? Next, maturity, what we are getting after a certain time period. So when we are talking about the maturity, for how many years we are purchasing this, what is the total time period we have to hold this bond, right? Coupon interest rate is the fixed interest you are getting, fixed interest you are getting every year as a regular income, right? So if we talk about the important parameter for any bond, yes, when I am going to invest in any bond, I will see the face value, I will see the maturity, I will see the coupon interest rate also. So the correct answer for this question is D. Next question. What is the self-regulatory organization associated with the derivative market in India? Now, you all must have remembered this derivative statement. So, I have told you that in India, derivatives are regulated by RBI, also by SEBI, also, and there is a self-regulatory organization also. Now, what is the name of the self-regulatory organization for the derivative market in India? We have four options. Now, just tell me the correct answer, everyone. Just tell me the correct answer, everyone, you guys. So the correct answer is what? And everyone, if you haven't subscribed this channel yet, guys, please subscribe this channel and press the bell notification icon. Why? Because see, tomorrow I am going to give you the module D marathon of PPB. Right? So PPB module D marathon, I will going to tell you. Okay. So kindly just please subscribe this channel, everyone, if you haven't subscribed this channel, because you will be get notified by the YouTube. Okay. Now, it is FIMDA. Just tell me the full form of FIMDA. Everyone has written FIMDA, but what is the full form of FIMDA? FIMDA. What is SIDBI? It's Small Industrial Development Bank of India. SEBI is Securities Exchange Board of India. Reserve Bank of India, and FIMDA is Fixed Income, Money Market and Derivative Association of India. Right? That is known as the FIMDA. Clear? Done. Next question. Which of the following statement best describe the spot price in a financial market? What is a spot price? The price of the financial instrument for the delivery in the future, the price at which the financial instrument is sold short, the current market price of the financial instrument for immediate delivery and settlement, the average price of the financial instrument over a specific time period. Now you have to tell me which of the following statement best describe the spot price. Which of the following statement best describe the spot price? Spot price is what? Yes, a spot price is the current market price of a financial instrument for the immediate delivery and the settlement. C is the correct answer. Next question. Now we have to choose the correct statement here. FERA, Foreign Exchange Regulation Act, was enacted to replace FEMA effective from June 1, 2000. The act also empowers RBI to make rules and regulation to carry out the provision of this act. Under FEMA, all the transaction involving the foreign exchange has been classified either as capital or the current account transaction. Now just choose the correct statement here. Everyone just please choose the correct statement here. Everyone, guys, choose the correct statement here. Now, again, there is an issue in the network, I guess. Network is clear, everyone? Network is clear, or there is any issue? Network is clear, yes or no? Okay. Network is clear, right? So, Foreign Exchange Regulation Act was enacted to replace FEMA. It is actually false. FEMA has been enacted to replace FERA, right? So, first is wrong. The act also empower RBI to make rules and regulation to carry out the provision of this act. Correct. Under FEMA, all the transaction involve foreign exchange either classified as capital or the current account transaction. Correct. Now, capital account transaction means any those transaction which affect either the financial liabilities or the asset, means any those transaction in which there is a change, either increase or decrease in the financial liability, or there is change in any assets, then it is a capital account transaction. Current account transaction means there is no change in the financial liabilities, no changes in the asset, right? So second and third is the correct statement. We have to choose the correct statement. Second and third is the correct answer, right? Next. Choose the correct statement again regarding FERA and FEMA. FERA was enacted to conserve the foreign exchange, but FEMA was enacted to focus on enhancing India's foreign exchange reserve. FEMA, violation of FEMA was regarded as criminal offense. Violation of FERA regarded as civil offense. FERA has more flexible rules and regulation if we compared it to FEMA. Now just choose the correct statement here. Choose the correct statement here. Everyone, please answer this question. Correct statement. We have to choose the correct statement here. Everyone, FERA and FEMA, again FERA and FEMA. Choose the correct statement, guys. So FERA was enacted to conserve the foreign transaction, but FEMA focuses on enhancing the India's foreign exchange reserve. First of all, you all are clear that which act is active right now. FEMA is active right now. Okay. Now FERA was to conserve the foreign exchange transactions right. FEMA enhanced the foreign exchange transaction right. Next. Violation of FEMA was regarded as criminal offense. No, it is actually a civil offense because that's why it has been replaced. See, FEMA is very flexible. Okay, so violation of FEMA is a civil offense. Violation of FERA regarded as a criminal offense. So these two are wrong. Now, third, FERA has more flexible rules and regulation if we compare it to FEMA. False. Actually, FEMA has more flexible rules and regulation if we compared it to FERA. So the correct answer is one only. A is the correct answer. Right, everyone? Clear? Vivek, Mohan, Lakshmi, Gopal, Hema, Irfan, Krishna. Any doubt in this? Any doubt in this? Can we move forward? If you have any doubt, please ask. No doubt, just please give me a thumbs up. Good. Next question. See, choose the correct statement. London Interbank Offered Rate, also known as LIBOR, was a very popular benchmark and was issued for US dollar, British pound, Canadian dollar, and Japanese yen. The rate was being calculated and published each day by the IMF. It served in seven different maturities. Seven different maturities means overnight, 1 week, then 1, 2, 3, 6, and 12 months. We have to choose the correct statement regarding the labor. Everyone, choose the correct statement regarding the labor. Everyone, please answer this question. Everyone, please answer this question. Okay, done. Third only, you are saying that third only is the correct answer. So first and second is actually wrong. Everyone, focused. Focus and please answer this question. Okay. Now, Acha, tell me what is wrong in the first statement and what is wrong in the second statement. Right. First and second is wrong and third is the correct one. Good. But what is wrong in the first statement? Why first statement is wrong? What are the you can say currencies which are involved in labor? So five currencies are involved in labor. Yes, dollar is included. Yes, pound is included. Canadian dollar is not included. Okay, instead of Canadian dollar, we have franc. Okay, Japanese yen and euro, right? So when we are talking about the five currencies, it is franc, euro, pound, yen, and dollar. Okay, and that's why first is wrong. Second, this rate is calculated and published by IMF. No, it is calculated and published by ICE, right? So second is also no. Third is correct because it is served in seven different maturities. That is correct. So the correct answer is A. All of you are correct, but none of you has given me the currencies. Okay, everyone, none of you have given me the currencies. Franc, euro, pound, Japanese yen, and dollar. These are the five currencies. Okay, done. Done. Next question. What is the minimum capital requirement for a merchant banker? Minimum capital requirement for a merchant banker, everyone. Merchant banker, minimum capital requirement for a merchant banker 10, 5, 50 lakhs or 10 lakhs. Minimum capital requirement for a merchant banker, everyone. Minimum capital requirement for a merchant banker is 5 crore. Everyone, right? Correct. Next question. Commodity fund primarily invest in what? Equities of FMCG companies, debt instrument, physical commodities or commodity futures or real estate project. The commodity fund primarily invest in which of the following? The commodity fund primarily invest in which of the following? Please answer this question. The commodity fund primarily invest in which of the following? So the correct answer for this question is correct answer for this question is what? Again, commodity fund primarily invest in what? Commodity fund, everyone. No, no. Commodity fund primarily invest in physical commodities and commodity future. C is the correct answer. C is the correct answer, everyone. Okay. Next question. Okay, next question. Derivative trading commenced in India after SEBI granted the final approval in May 2001, based on the recommendation of which committee? Again, a very important question. Derivatives. So, which committee is actually related with the derivative? You have to answer. Which committee is regulated or which committee is actually associated with the derivatives? Everyone. The correct answer is everyone. At least whoever is watching this video, kindly just please at least like the video, guys. At least just please like the video, whoever is watching this session. So, derivative trading commenced in India after the recommendation of LC Gupta committee, right? So, B is the correct answer. Very important question. Committees are very important, right? Next question. Which of the following statement is incorrect? Finance for new project is riskier. Venture capitalists finance established project. Venture capitalist is a long-term investment. Venture capitalists step in where the probability of the failure is high. We have to choose the incorrect statement here. Now just choose the incorrect statement here, everyone. Which of the following statement is incorrect? Financing of a new project is riskier. Venture capitalist finance established project. Venture capitalist is a long-term investment. Venture capitalist step in where the probability of the failure is high. Obviously, venture capitalist finance established product. They are actually investing in the startups. They are investing in what? Startups. So B is the correct answer because this is the incorrect statement. Okay. Now the last question of the class. In India, credit rating agencies are regulated by which of the following? Credit rating agencies are regulated by whom? So this is the last question for the class. Everyone please answer this question. Credit rating agencies are regulated by whom? Everyone. Credit rating agencies are regulated by whom? What about the fourth option? Venture capital step in where the probability of the failure is high. Yes, it is the correct thing. See, when we are talking about the venture capitalists, they provide fundings for those projects also where failure of the probability is high, right? So this is also the correct thing. Okay, so B is actually the wrong statement, incorrect statement here. Credit rating agencies, guys, what you are doing, credit rating agencies are regulated by SEBI only, Securities and Exchange Board of India. Okay. Now, see, these are the easy questions. I know, but these are actually very confusing plus very important question. These questions are also necessary for your scoring because when you are getting your examination, right? So in examination, you will see that there is a mixture. There are mixture of both difficult plus easy question. There can be statement based question, one liners MCQs also, plus a case study based questions also. So you have to practice each and every type of questions for your examination, right, everyone? So thank you so much, guys. Thank you. CRISIL is the first credit rating agency in India, right? Okay. So thank you so much, guys, everyone, for joining this session. Just kindly please like and share the video to the maximum you can. So everyone who have joined this session, at least please like and share the video to the maximum you can. And if you haven't subscribed this channel yet, please subscribe this channel and press the bell notification icon. Thank you so much. Take care, everyone. Thank you so much, guys. Right, Irfan. Thank you so much. Thank you, everyone. Take care, guys. Bye bye. Have a very nice day. Take care. Bye.